Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, April 17th, 2019. Well, folks, I have a few different very important things to go over, including trade setups as well as charting updates. So, first off, we have to look at the S&P 500 because this ridiculousness continues. Institutions pumping the market up pre-market and then selling into it. It's just become a norm at this point as they continue to try to get out of positions early in the day when there's volume. Remember, early in the day, that's when the heaviest volume is there, so that's when they can unload. So what they do is they pump the market up pre-market, get the futures to open higher, and then ultimately they sell right into it as the small investor gets lured into buying the market. All right, you could see it no better than yesterday and today. Here's today's gap up, and then look at the market. Institutional selling, all right, and all the way really down to here, the 200, and then they stopped. Look at the volume die off. There's too little volume for them to sell into. The markets then go back to light volume and float up. Yesterday, the CEO of BlackRock was out over the weekend or on Monday morning, or Tuesday morning, excuse me, yesterday. We saw other big wigs pumping the market up. It opens up, they sell right into it. I mean, the day before, look at this. I mean, this is ridiculous. Look at the sell-off here. I mean, this is just it's become the norm, and it should freak out every investor, folks, because you got all these big wigs and these analysts talking about melt up in the market, and we're just going to go higher and higher. And what does that do? It gets the small investor to get in the market. In fact, there was an article this weekend that said the small investor, the average investor, is now fully invested. They're full bullish now. After the debacle in October, then in December, they are full out bullish now, all in. And again, that's scary because you know when the small investor is in, something is going to be amiss, and the institutions are utilizing that to their advantage. And that's not right, frankly. That is not right at all. It is what it is. I'm just pointing it out to you guys. Do what you want with it. But be aware, folks, there is something going on here. I mean, these sells are epic. I mean, these are not just, little downticks. I mean, this is like, yesterday we basically went to gap fill from a big gap. Look at today. Look at the gap up there, and look at the 4-bar surge to the downside. I mean, that's an incredible amount of distribution going on as they take it down into that volume. I mean, they're willing to dump harder and harder, which tells you we're getting closer and closer to a corrective move in this market. All right, having said that, I want to show you a trade we took in the intraday stock chat. Then I'm going to give you a new trade setup going into earnings. I want to talk, let's first talk about IBM. So IBM, folks, down huge on earnings. I called this yesterday, and I'm going to show you how I called it. You can go to Twitter. You can see the chart I put up. All right, this is spectacular. Let's take care of that line right there. So yesterday I posted a chart on Twitter. You can go to my feed and see it. You can see the timestamp. It was before the end of the day. I said, holy cow, this is a great short. I don't know how I don't go short here. I'm going to go short. The reason being is, here's a gap. Look at this big gap. And look at yesterday going into earnings before they announced. Look at this. There's your gap fill. And it happened to just the day of earnings, before, literally hours before they announced earnings, it filled the gap. We know gap fills are major epic resistance levels, and look at what happens off of it. So resistance, price rallies all the way from almost $100 back to $145. It fills the gap hours or an hour before earnings. And then look at what happens. Stock price today hit a low of 136. That, when you see that, that is like, whoa, holy cow. I remember seeing it and almost jumping out of my seat yesterday because, it's one thing to fill it like 2 weeks ago and then chop around and then you get a bullish pattern and then you don't know which way it's going to go. It could go either way. This was about as sure of a signal as you could get that it was going to fall on earnings. And sure enough, as I posted, as I shorted, it did get that, and that was a beautiful little setup. Okay. Next up, we did a day trade today on Qualcomm. I have to show you this. These lines are arbitrary from a while back, but I want to show you how we knew Qualcomm was an awesome short. We shorted at an average price of $81.75, and we ended up making over $2 on this short today. I could have even held it for more, but I want to show you how I knew. All right, check this out, guys. This is some cool stuff. So what we're going to do is we're going to go to the weekly chart. All right, let's go to the weekly chart here, and what you can clearly see, all right, check this out. So what you can do here is you can basically take this pivot here. So see this pivot? Take that high pivot, which was the highest pivot from 2017. Okay? Then match it up to the highest pivot from 2018. Look at what you get right up in that top area. All right, now, we always like to have two factors based on PPT methodology. So trend lines, price, pattern, time factors, time counts, cycle stuff, whatever compiles, you want two factors to get a high reward short trade here. And what I'm going to show you next is just proof in the making here. So go to your monthly chart and look at this pivot high going back to, I don't know, 03, 02, something like that. Put a trend line in there and look at what it intersects with. The highest pivot since the early 2000s, right there, a double top. Look at price today. Notice how this line, this flat line, intersects this upsloping line right here. That's where we shorted, and look at the pullback. Do you guys see how that works? Really amazing. This is why you honestly need to look at all time frames. Got to look at all time frames. This morning was an awesome trading morning. We had 3 winning day trades of over $2 each in the chat room. It was an over $8,000 day for me myself. Other members who do bigger size than me made over $10,000. Some do less size. They made a few $1,000s. But really, there was no one in the chat that made less than a couple $1,000s today. And we all did these trades in the first 30 minutes of the day. Think about that. 30 minutes of trading in the intraday stock chat. 2,000 minimum profit. Some people had 10,000, some people had 5,000, I had 8. I mean, it was just a beautiful thing here, folks. So, again, this is what we do in the chat room. There's a 7-day free trial. You got to get involved. Like if you have an hour in the morning, especially during earnings season right now, this is where you got to be in the chat room because there are amazing trading opportunities. As I said, we had other trades. We had UNH. Take a look at UNH, which is just getting clobbered. This is the monthly chart, but if we go to the daily chart, look at this drop here, folks. You want to know where we bought? Look at this. Look at this little pivot low. That's where we were in. Look at the bounce since then. All right, we bought it like 208 and change. It was the low was 208.07 because of this double bottom. That was the second trade in. We actually played this pivot low right here and made another $2 on a bounce. Then we bought it again down here, made another $2. I think this last one we made $2.60. And again, I mean, look at the pivot point. I mean, just a beautiful thing. Plus, you get multi-factor here. You get a reversal here, a big drop. I mean, it's just a beautiful setup. You actually get a measured move from here to here and from here to here, a pretty much identical measured move there as well. So really cool stuff. Okay, now on to the trade setup that I want to talk to you guys about. These are high risk because it's earnings after the bell. But again, this is very reminiscent of what happened to IBM. This is Las Vegas Sands. They report earnings after the bell today. And what I'm telling you here is that the stock has rallied from below $48 to $68. I mean, you're talking almost a 50% rally since the start of the year. And one thing that's catching my eye is look at all these pivot points. Pivot point, pivot point, pivot point, pivot point, pivot point, all across, even here. So what I want you to do is basically just draw a trend line right around these lows. All right, so you have this low, then you have right here, and then you have this area. And basically, you could go as high as here. So this is the risk. The risk on this trade is to $70. But I'm in the camp that based on the extended move, you're going to get a pullback off these pivot points right here. And you should see a pullback maybe as low as $65 or $64 on earnings on Las Vegas Sands. Now, be aware that, anytime you buy or short something into earnings, there's definitely risk involved. So be aware of that. But this is one of those setups that I like. I like it almost, not quite as much as IBM. IBM was about a 97% success rate trade. It was kind of one of those that slapped me in the face when I saw it. Like, holy cow, I can't believe I'm actually seeing this. Las Vegas Sands is probably in the 80% range, which is still really good. But again, there's still a 20% chance it goes up to about 70. But the max upside is only $70. So I mean, you're talking $2 risk here, probably to the offside of likelihood of 80% success rate to the downside of about $3. I like the risk reward here. I like it. I wouldn't probably play options because if the stock doesn't really move on earnings, then you're going to lose a lot of that premium going into options. But I think this is one where even if you want, you could do like 100 shares, 200 shares, something small, and end up making $500-600 pretty easily. Again, there's risk, so we understand that. There's nothing guaranteed with earnings, but that's the way I'm seeing it right now in terms of the chart setup, the rally it's had. I think it's pretty hard to imagine this going much higher. Again, maybe 70, but even if it hits 70, you could probably stick with it and then just, it'll pull back in a few days. A good example of this, by the way, is ASML, which reported earnings this morning. Take a look at this. So this could be what happens to Las Vegas Sands, too. Maybe it has a little bit of a gap up. And again, I don't think it will, but the off chance it could. It gaps up, and then look, it just dumps right out anyways. And this is a great example of a chart that's extended, that's still got a gap up on earnings, and then collapsed. Oh, speaking of gap ups, Netflix. Oh, my Lord, Netflix. So this is where the shadiness of Wall Street just pisses me off. I mean, we talked about how the big wigs, these big institutions, are pumping the market to small investors to get them to buy, and they just sell right into it. But, I mean, Netflix was down yesterday after earnings. They lowered guidance. The guidance, honestly, was horrendous. I mean, it's clearly slowing. Their growth is slowing. Disney coming online, Apple coming online. I mean, this thing is going to be trading sub 300 within a couple months, right? But this morning, the stock, after being down yesterday after hours, it was up like $12. And I looked at this morning and I did like a double take. I'm like, are you shitting me? Excuse my language. Are you kidding me? And sure enough, as soon as it opens, you have like Kramer and all these other guys like pumping it, like, oh yeah, look, it's up. It wasn't bad. It wasn't bad. It was, ugh. And then as soon as it opens up here, I mean, it traded as high as 268, which is $13 higher than it currently is, and then it just sells straight off. I mean, think about the small investor that bought at the open, being like, "Oh, well, yeah, I thought they were bad, but I guess it's going up, and I'm hearing positive things." And then Deutsche Bank yesterday. I mean, come on, Deutsche Bank. First of all, if I said this yesterday, sorry to go on a rant, but Deutsche Bank, you know, they were the worst one during the financial crisis. They still have toxic assets galore, and they upgraded going into earnings yesterday. Upgraded. The stock obviously had a big day because of it, because shorts covered and got spooked. Um, if you're a short that got spooked, honestly, I think you can get back in this and ride this thing down sub 300, probably within the next month or two. I mean, any sort of corrective move in this market where we drop 5% on the S&P, which will happen at some point, you will see this stock go back to 300. Because, again, the guidance was horrendous. And then, I mean, just think about what happens when Disney really gets going, Apple really gets going, all these other, subscriptions. I mean, think about the signups probably for HBO Go right now, which is $15 a month because of Game of Thrones. And people now are getting stretched. And you could say, okay, well, for cable, people pay 100 and change. Well, you know what? You add HBO Go, you add CBS All Access, you add Apple, you add Disney, you add Netflix. You're getting plus 100 right there, basically. I mean, so you got to think about it like that too. So in any case, that's just a gripe I have. I mean, I don't know what some of these analysts are smoking, but certainly they're smoking something pretty powerful to get them to make these statements. And I don't know, in a weird way, I hope I hope the market does go higher in a weird way, just because some of these institutions and these heads of these, think from BlackRock and so forth, because they've said these things, like, it's just such a shame if the market ends up basically being a top here because of what, they say this and then the market tops out and reverses and then these small investors get caught in it. But I mean, to me, it's very irresponsible, saying, oh, the market could melt up, and you're seeing targets on the S&P like 3,100, 3,200, and so forth by the end of the year. And if that happens, more power to it. Okay, they were right, I was wrong, but I still think, at this point, the markets have gone up so much. I mean, if you look at the SPY, folks, and here's my day trading chart, so there's a lot of lines on it. But if we go to my other chart, I mean, look at this run, and you're telling people now it's melting up, and you're getting the average investor full out bullish. I think that's a little problematic. So, anyways, I digress. Bottom line is, we're here for you guys at InTheMoneyStocks.com. If there's one service to join right now, it's the chat room, folks. The intraday stock chat, 7-day free trial. The way things are going, you'll make a year's worth of what it costs even if you're a small investor with only 30,000 to remember, you need 25,000 to day trade. So if you have 30 or 25, 30, I think even with that lower account size, you'll still make enough in a month to pay for a year of the service. I mean, it's incredible like that. So come join us here at InTheMoneyStocks.com. Get involved, guys. We'll see you soon. Take care.